thinking of buying a property, if you're about to get a mortgage, then there's 5 things you should completely avoid. And today we'll have Mary, who's the general manager at Flexdoc, sharing a few tips and tricks to avoid these 5 big issues. Now, voy a convertir al español. Este video tiene subtítulos tanto en inglés como en español. Uno los puede activar apretando en YouTube el botón que dice CC. Así que ahora sí voy a volver al inglés para tener esta conversación con Mary. Mary, welcome to the podcast.
Thank you for having me.
How are you going?
Good, thank you. How are you?
Very well, very well. So before we get into it, I would really love if you could share a bit of your background because you've worked for quite a few years for ANZ.
Sure.
So can you share a bit of your experience?
No problem. So a quick summary of
Yes.
it. I spent almost 9 years at ANZ and I worked in different parts of the bank.
Yeah.
Most of my lending experience was in the commercial side of things, and then I moved over to residential. So I have a mixture of business and non-business lending experience.
Great. Love it. So could we do a countdown 5 to 1?
Sure.
Starting with 5 things that you should not do if you're thinking of purchasing a property and therefore you will be applying to a mortgage.
Sure. So the 5 things that I think you should keep in mind, or that people tend to forget, I
Yes.
suppose, when they're looking to apply for a mortgage.
Yes. What's your number 5?
Sure. Number 5 would be making a major career change or changing the business structure.
Okay, and what's that?
So some people may not like their careers and they want to change their direction and do something completely different. Or they've had their business running for some time and they're wanting to make some changes, whether it be bringing on a new director, new shareholder, or just completely changing what their business does.
Yes.
And they forget that that might have implications on a mortgage.
Yep.
So banks like to have, or
Stability.
they value stability. Yes,
Yeah.
absolutely. If you're planning on making career changes, by all means. If you're planning on making business structure changes, by all means. Just know that some lenders may require you to wait 6 to 12 months, depending, before you apply. And I should just have a separate little disclaimer here. If you're changing employers, that's
Yes.
okay. So if you're going, like I did, from bank to broker,
Yeah.
that's okay because it's a similar or same industry.
Yeah.
But it's when you're completely changing that it's a problem.
And let's make it clear. It's really, really important for each specific situation to consult with a mortgage broker
Yes.
because someone who's working as an employee with a tax file number might be okay if they're done with their probation period,
Yes.
right? In some industries even, those that are like high-paying jobs and there's a lot of job offers out in the market, some lenders might even be okay if you're in a probation period.
Absolutely, yeah.
But then there's other people who banks are like, no, sorry.
Yeah.
You don't have that benefit, right? And then
Yeah.
it's different if you're working with your own ABN or you have a company.
Yeah.
So each situation specific. I can talk from my personal experience where my partner is self-employed. He works with ABN. And he actually prepared himself more than 2 years to go and get his first mortgage because he knew he had to present 2 full annual tax returns.
Yeah.
And then it was painful, and 2 years whilst you're living through them, that feels very long.
Of course,
But
yeah.
then time goes by,
Yeah.
and he was able to go and get a mortgage. But with that in mind, he was very strategic on how he, the conversations he even had with his accountant, because you might not want to expense everything under your ABN if you're trying to get the maximum borrowing capacity, for instance.
Yeah, absolutely. There's definitely accountants that will help with tax strategy and tax planning.
Yes.
And it's very important to consider those things too, definitely. But I'm sure your partner was very happy to be completely prepared for the home loan application rather than sort of going in expecting things to go smoothly and then suddenly having a decline. So
No. He prepared himself because, and then when I say more than 2 years, basically the first when he started his ABN, it was halfway through a financial year.
Oh, yes, yeah.
So that's why he didn't have enough income that year.
Timing's very important.
Timing is very important. So that's why he's like, oh, now I have to do another year,
Yes,
right?
yeah.
And that's things that happen. But like, let's just be mindful that
Yeah.
those changes. So I've also had a lot of friends,
Yeah.
multiple friends who are like, okay, I'm going to buy a property first, and then I'm going to change jobs or change careers. And I think
Yes.
that's smart.
Of course, yes.
It's a sacrifice that you're willing to do if you want to buy a property.
Yes.
Cool.
And then, of course, budgeting is very important at that point, depending on the job you're changing to.
100%. So let's
Yeah.
go with your number 4 mistake that you should avoid.
Number 4 would be applying for credit cards, car loans, personal loans, that sort of stuff, either just before or during the application process. Very big no-no during the application process.
Yes.
I think people sometimes forget. They're like, oh, I've already submitted the application. It's okay. I have this emergency. I need to get a credit card, or something's come up and this car that I really want is now available, so I'm going to buy that too. It can impact your credit score. It can impact your borrowing power. It can impact the application if it's already been submitted.
And let's just make it clear. Even if you hold a credit card,
Yes.
and the credit card has no debt, so you paid month to month, you're not buying with just future payments and
Yeah.
debt. The fact that you have a certain limit within that credit card,
Yes.
that will impact your borrowing capacity.
Yeah, absolutely. So the banks consider the limit, not how much of it you're using.
Yeah.
We assume, the banks will assume rather that as a worst case scenario, you apply for this home loan and there's this big emergency and tomorrow you max out your credit card. What's the minimum repayment? So that's what the banks are looking at.
Exactly. So it's not the same. So for instance, again, personal experience, multiple times I've had my mortgage broker tell me, Tiffy, I need you to close your credit card.
Yes.
And I was like, can I just reduce it to the bare minimum, because I have direct debit set up from
Yes.
there. Like,
Yeah.
it's a nightmare. Like, all of my direct debits are there. So just having a really, really big spending limit makes no sense if I don't need it, because it just reduced my borrowing capacity by a lot.
Yeah.
Again, I didn't do any changes before consulting the mortgage broker. I think that's
Yes.
really important.
Yeah, absolutely. A lot of these things is definitely a don't do without talking to a broker.
Yes.
Talk to the broker and they will go through everything with you for your specific scenario and tell you what works for you, because everybody's different.
Yeah. And that's the thing. When you're, for instance, we've had so many clients that come to our world. I thought in the Latin American community, this didn't happen that often, and we're finding it more and more often.
Yeah.
They come to us and like, 6 months ago, I got a car loan. And that used to not be a thing. Latins used to just buy all cash what they could afford. And we're seeing more and more car loans. And unfortunately, then when they're trying to buy a property, that has a massive impact, because in many scenarios, we've had the mortgage broker say, if you want to be able to afford and have the enough borrowing capacity to purchase this property, you need to fully pay your car loan.
Yes.
And then suddenly, if you have a 20, 30, 40K car loan, that's a lot of cash that you need to.
Yes, definitely. It definitely eats away your ability to repay.
Yeah, correct. Awesome. Cool. Let's go with number 3.
So that actually was a good flow on talking
Yes.
about credit cards, because the next thing that I was going to say is failing to disclose debts and commitments. So the biggest or the most common that we find is the credit cards. People
Yes.
say, I don't use it. I just have it there for emergencies. And irrespective, you have to let us know that you have it. Same thing applies for things like HEX debt, ATO obligations. We like to know everything up front, and then we're able to better tailor the mortgage solution to your needs.
Yeah.
And again, same thing with HEX and ATO obligations as credit cards. If you are required to pay them out, the mortgage broker will let you know.
And I'm going to deep dive into that, because I don't have that many people that I know from the Latin American community who would have studied in Australia and have HEX debt. That's still a thing, but we're seeing maybe a few that are second generation, so Latin American parents, they speak Spanish, they come into our world. But yeah, they're the younger generation that we're seeing, right? But if you have HEX debt, it does take borrowing capacity out. Now, with ATO obligations, I've seen that a lot more often in our community, especially people who work as self-employed.
Yep.
And in year 1 and even year 2, they have not yet figured out how it works.
Yes.
And they get surprises when they go and do their tax return. Tax return time comes, and I've had this conversation with multiple friends of mine specifically. So first year, they have not set money aside to pay for income tax. And so they're like, oh, I have this massive bill. Okay, let's do a payment plan.
Yeah.
Right? Cool. But then you're trying to buy a property and that payment plan with the ATO does impact
Absolutely.
your borrowing capacity. And then by year 2, they might have surpassed the GST threshold, which is $75,000.
Correct, yep.
And then they start mixing up paying income tax with GST.
Yeah.
They mix up and they think they're paying the GST component, but actually they were paying income tax.
Yes.
And suddenly now they have to pay this on top.
Yeah.
And they don't realize that it's two completely different things,
Yes,
right?
yeah.
So when we're talking about ATO obligations, when you're an employee, it's easier because it gets deducted before it hits your bank account usually if it's properly structured.
Yeah.
Whereas when you have your own business, self-employed, that's when surprises arise.
Yes,
really.
definitely. And you're right. We do see a lot of people who in their first and second year aren't familiar. They're not budgeting. They're confusing GST and income tax.
Yes.
Number one recommendation there, get a good accountant
Yes.
who will help you organize all of that. But yeah, I've always when I was in the banking world, I was always taught there's only one person that is worse than a bank that you owe money to, and that is the government.
The government. And I heard this, same that you were saying.
Yeah.
We have friend of ours who's my parents' age.
Yeah.
He's been in Australia, so Latin American, living in Australia for 40 years.
Yeah.
And the first thing that he told us, he has a business. It's like, you never ever want to owe
Definitely.
the ATO, right? The government.
The problem is, just to sort of, I guess, tie it in, but the problem is during COVID, a lot of people did defer payments there as well, whether it was at accountant's advice or based on what the ATO was offering.
Yes.
And unfortunately, that has meant that they've fallen behind as well. Being on a payment plan is great. It's better than no payment plan.
Yes.
But owing nothing is the best.
The best.
So,
Yeah,
But again,
perfect.
don't pay anything out unless your broker tells you to.
Awesome. Perfect. Let's go with the number 2 thing that you want to avoid.
Sure. This is one that is becoming rather more and more common.
Trendy.
It's more trendy, yep. And I'm seeing a lot of credit wipe businesses talking about this on their platforms as well.
Yes.
I'm sure, or well, assuming everybody has heard about it, but things like Afterpay, Klarna, and ZipPay have all now changed their regulations, or ASIC has forced them to change their
And
regulations.
this is brand new information. Let's be clear.
As of this month, I believe it was.
Okay,
as
so
of
we're
June.
recording this June 2025. Maybe this comes out in July, but it's just brand new.
Yes.
So anything that is buy now, pay later.
Yes. So
Okay.
a lot of those buy now, pay later facilities that you just tap when you go into the shop and you purchase the item, but you're paying it slowly over 3, 4, 5, 6 installments,
Yes.
depending on the facility. Those are now being treated differently by lenders. So they were always a bit taboo. Banks didn't really
They were
like
a gray
them.
area, and now they've
Yeah.
established that
Black and white.
black and
yes.
white. Okay, and
So-
it does affect borrowing capacity. I'm gonna
Yes.
guess. Yeah.
So depending on the limit and the facility that you have, it'll either be treated as a credit card. So the same way that we treat a credit card, you have a limit. It is a recurring amount that you use and dip in and out of.
Okay.
Or if it's below a certain amount, it gets treated as a living expense. So it's an expense that you have regularly. And that, in both scenarios, impacts your borrowing capacity for sure.
Awesome.
Yeah,
Perfect.
so definitely something to consider before you go ahead and just afterpay it. Yeah.
That's really, really important. And let's go with your number 1 thing that people should avoid.
Yes, lucky last one. And this one I see where people don't set up direct debits or automatic payments. Sometimes things get missed, or you forget to put money in the account and you suddenly don't have enough to pay for that bill or to pay your credit card, or you might have a personal loan or a car loan, whatever it is. One missed payment can impact your credit history. Obviously not as impactful as multiple, which is why we always recommend, having a direct debit set up, having a regular transfer to the accounts where you have direct debits coming out of. And I've noticed even for like my own banking, my credit card now has a little thing on the bottom when I open it up that says, we're anticipating this expense that's coming up. Do you have enough money in your account? And they give you plenty of warning. So those little things are good
I
to
want to
keep in
give
mind.
an example of something that happened to me there.
Sure.
Because I think it's really important if you're trying to avoid these issues. So I have a philosophy. I have multiple properties.
Yeah.
And I try my best to make sure that for each specific property, I have a bank account where income and expenses from that property are just in that bank account. So I can properly track separate properties.
Perfect.
Which is perfect,
Yeah.
right? Now, once I've made this mistake and never again, where the bank that was giving me the mortgage was also giving me an offset account. And I unfortunately used that offset account as the bank account where I would put income and expenses. The issue with that is that when I went to remortgage a couple of years later, I needed to close that account, right? Like there was no sense. I had just too many bank accounts.
Yeah.
I no longer was going to have a mortgage with that bank. The offset had no sense of being, but I had already set all of my direct debits from that offset.
Yes. Yeah.
Okay. So what ended up happening, I had already seen this issue with clients of ours where they go and do everything properly and they change all of their direct debits, but some provider fails to properly process the change.
Yes.
And then when they go and debit it, you essentially default, and it was not your fault, but you're defaulting.
Yes.
And so what I did, I was like, okay, I left that offset account open for another 3 months after I had closed my mortgage account.
Yeah.
Because I wanted to make sure that as I had transferred all of my direct debits, everything had been processed correctly. I was so unlucky that in month 3, I had a quarter bill. Like there's bills that come quarterly, right?
Yes, yeah.
In my month 3, I was like, okay, it's been 3 months. Everything has gone correctly, has transferred. I'm going to go and remove the money and transfer it to my other bank account at my other offset and just close this one.
Yeah.
The day that I removed the money, the day after,
no.
I got, I can't remember, it was a bill, I don't know if it was like council rates or something like that comes quarterly, that hadn't processed correctly.
Oh no.
I was unlucky enough that happened, but lucky enough that I figured it out the same day because I was about to close that account, that I saw that bill with no money and I called within the same day and made the change and paid for it.
Yeah.
So if you sort it out within 24 hours, I don't think, in this particular case, it didn't look at like a default.
Yeah.
And I was very lucky.
Yeah.
But from that instance onwards, and I had already figured this out, I never again set direct debits from mortgage or mortgage offset accounts.
Yes.
Because the day that you want to change banks, that's a nightmare.
Yes.
Right?
Yeah.
So that's my recommendation whenever you are buying a property. It's great if you have your bank account with the mortgage and the mortgage offset, and I always make sure that there is enough money, etc. But I put all of my income and expenses as direct debit set on a different one.
Absolutely, yeah, that's a really good practice, and obviously you saw the bad side of it, but definitely set your everyday living direct debits and that sort of stuff out of an account that you know you're going to keep, that's not going to be closed or regularly moved around.
Yeah.
Mortgage repayments, try and tie them to an account that you can see.
Yes.
Mortgage repayments, other expenses for the property, it just makes things easier. But yeah, they're the 5 things pretty much.
Awesome. Any final message that you want to leave with someone who has never, ever before requested a mortgage, so they have never purchased a property in Australia before, and they're like fearing having a mortgage? Like, what would you tell them?
I don't bite. You can come and talk to me or any other broker. There is so many brokers in the country. And, don't be afraid. Just book in with someone, have a conversation. All brokers, most brokers, I will at least, be happy to have a conversation with you and prepare you for a mortgage. Just because you're talking to us doesn't mean that we're going to be like, yep, you have to sign the dotted line now and have a loan. We can prepare you to be ready for a property in the future.
Awesome. So what we're going to do is in the description, you will be able to book with wealthy.com/book-español, and we'll direct you to Flexdoc, Mary, and the team. Thank you so much, Mary.
No worries. Thank you so much for having me.